Hello, I'm Jorge Herreria. Today is March 24, 2019. Okay, let me share my view on the market and hopefully you put some comments or you let me know your view as well. Over here I have the S&P 500 and a bunch of lines. I'll walk you through them. What am I seeing happening on the market? I suspect the market is going to pull down. And yeah, probably it might come back a little bit and then start pulling down. And all of this for this week and possibly the next week also. My target areas are the 7886 Fibonacci, which coincides, right here, the 7680, which coincides with the 200 moving average. So that's something that I put in as my target for my shorts. Yeah, some details, technical details that I'm paying attention is notice how the 50 moving average is about to cross the 200 moving average, which for some technicians, once it crosses above, there is going to get a bullish signal. The more important aspect that I'm going to be looking at is the 21 exponential moving average and the 8 exponential moving average if they cross or if they squeeze. What I mean with a squeeze is something like happens, of course, inverse over here, where yeah they cross but very little. So this is a squeeze versus a significant cross will be something like this where it crosses and the space between the two of them continues to be wider. That will help me to assess how strong the pullback it can be there. But well, anyhow, my first target is right here. Once the market reaches over there, I will need to assess again in order to figure it out what I think the market is going to do. That's in the S&P 500. So some indicators that are pointing me that yeah, we have a we are due for a pullback is the distance between the index and the is moving average, the 50 moving average. The top was a 4.4% and the and the S&P 500. So it was not too far. Usually it likes to go around 5% and then starts pulling back. So that's what I'm thinking, that this pullback is going to be mild. Okay? Other indicators is the percent of stocks above their 50-day moving average. That's the candlesticks. It dropped below the 50. So less right now is 46.92% of the stocks are below their 50 moving average. It is still on the normal range or yeah, normal range. However, it looks like it wants to come to this support area of the 45%. So it's very close to the 45%. If it closes below 45%, then the pull down will be more significant. Another indicator that I use, this is for more medium term, long term, it is this green line, which is the 200 number of stocks above their 200 moving average. Right now is below the 40. 40 seems to be the mark, the line on the sand where investors feel confident on the uptrend. Below 40, they start getting nervous. Definitely below 35, it puts a very bad connotation on the market. So we are right now at decision points. We're at 39.9. I think it's going to drop probably to 37 and then resume coming up back. The other line, this blue line, it is the one that I use a lot in order to detect the bottom of the pullback. And this is the percent of stocks above their 200 moving average. I deem, based on the movement that is happening, that is going to come to 25 and probably all the way down to 20. Definitely, if it comes to 15, only 15% of the stocks above their 20% moving average, that for me will be a signal that the bottom is nearby. However, I'm expecting 25, between the range of 25 and 20 to be a signal that is, hey, Jorge, pay attention, the bottom is nearby, it is within days. Another indicator that is telling me the bear tone, it is the advanced decline on the Nasdaq. It closed below its 10-week moving average, and this is a phenomenon that I'm seeing, a divergence that is not making higher highs. And versus the high on back on September, it hasn't not reached that point. Okay, but well, in the short term, that is this video, it crossed below the 10 the 10 moving average, which puts the bear connotation there. A similar chart, but now in the NYSE, and the NYSE, yeah, it closed at a smidget below the 10-week moving average, and I was, here how the highs on September. Now this one has made a higher high, so we have had divergence there on the advanced decline line. But nevertheless, going back for the short term, yeah, well, okay, this one is it crossed below, but this chart looks way better than this other chart. So that's telling me why the mild pullback, is going to happen to probably the 200 and the NAS and the S&P 500, a pullback to the 200 moving average. That's what I'm saying. It's like, yeah, it's going to come down to here because these indicators. Here's another indicator that is giving me the bearish tone. This is the Nasdaq advanced decline on volume, and it crossed the 100,000 line. That seems to be, trading between 1,000 and minus 1,000 is normal. Well, we have an anomaly right now. It's not normal to cross that line. Similar fashion, now on the NYSE, we have a advanced decline crossing the line of 1,000. Seems that the NYSE is more tolerable. It has a wider range, probably in the 1,300, but nevertheless, the anomaly presented itself. Over here, I like to also check how the risk is on the investors. And a way that I measure the risk is if they are willing to invest in emerging markets versus the S&P 500. So this chart is comparing them, and well, continues in a connotation of trending down. What is telling me, yeah, they're not risking it too much. A few days ago, I was getting slightly optimistic because it was the pattern of making lower highs was broken over here, but well, it didn't fly. It continues to go down. Something that is interesting is we can see this horizontal line that we have some support. So I will keep an eye on this line. If it continues to break that support, something that comes down to here. Okay, that means yeah, is giving more bearish connotation. Let's take a look on the Nasdaq Composite. And a similar chart, and I have this very similar targets. See the 200 moving average over here, and is matching the 78.86 Fibonacci retracement. So same target. I think the market will go up a little bit and then pull back, pull down, and hit that 208 moving average. We can see this. I don't know if it's a valid support line, but yeah, it's kind of okay. It will coincide with this pullback that I'm expecting to happen. Alrighty, share your thoughts. Talk to you soon.